This video series took 720 hours and 1 month to produce, truly enlightening. In this video, I will guide you through breaking down the essays of Warren Buffett providing a deep understanding of the investment philosophy and mindset of the legendary investor. This is more than just an investment book. It's a treasure trove of knowledge about success, finance, and mindset. If you aspire to shift from pursuing wealth to controlling wealth, this book will be key to achieving your goals. 1. The core concept of value investing. Value investing is the core of Warren Buffett's investment philosophy. Unlike many investors who chase short-term market fluctuations, Buffett focuses on the intrinsic value of a company. He emphasizes that investors should assess a company's long-term growth potential based on its fundamentals, rather than being swayed by short-term market volatility. Buffett specifically mentions that true value investing involves selecting stocks that are undervalued by key market. These companies typically possess strong competitive advantages and stable long-term cash flow. Buffett's value investing approach goes beyond simply focusing on a company's current performance. It prioritizes its future potential. In his view, choosing a company with a competitive advantage and holding it for the long term is crucial for achieving capital appreciation. Warren Buffett consistently adheres to one principle: invest in companies you understand and trust. This is one of the reasons he has been able to stand out from numerous competitors. 2. The relationship between value investing and market timing. While Buffett emphasizes long-term investing, he also understands that the market is not always rational. During certain economic cycles, market prices may be significantly overvalued or undervalued. Buffett's investment strategy is not to blindly follow market sentiment fluctuations, but rather to seek out and invest in high-quality companies whose prices are severely undervalued. When the market is excessively fearful or optimistic, Buffett calls this strategy contrarian investing, which means buying stocks when market sentiment is low and cautiously holding them when the market is excessively optimistic. This strategy means that investors need extremely strong patience and a keen insight into market sentiment to make the right decisions in an uncertain market. 3. Judging investment timing and capital allocation. Buffett understands that correct investment timing is a crucial component of successful value investing. However, Buffett's timing does not refer to short-term market fluctuations, but rather to an assessment based on the intrinsic value of a company. In other words, Buffett doesn't look for short-term market fluctuations, but rather for the optimal investment opportunity when a stock's market price is undervalued. Furthermore, Buffett's investment success stems from his rational capital allocation. He invests in companies with long-term competitive advantages through mergers and acquisitions and direct investments. Simultaneously, Buffett emphasizes maintaining sufficient cash reserves to capitalize on future market downturns. Buffett has always believed that the most important thing for investors is not to increase their investment frequency, but to carefully select companies that create sustainable value. Therefore, investors need patience to wait for suitable investment opportunities. For real-world example, how Buffett selects high-quality companies. In his letters to shareholders, Buffett frequently uses examples of his own investments to explain his investment philosophy. A prime example is his investment in Coca-Cola. When Buffett first invested in Coca-Cola, the market was pessimistic about the company's prospects. Many investors believed it had reached its peak and lacked further growth potential. However, through in-depth analysis of Coca-Cola, Buffett discovered that its brand value, broad market coverage, and stable cash flow meant the company still possessed long-term growth potential. Buffett found an undervalued investment opportunity in this way, successfully investing in Coca-Cola, which brought Berkshire Hathaway huge returns. This case not only demonstrates Buffett's unique insight in selecting investment targets, but also shows how he can identify truly promising companies amidst market sentiment fluctuations. 5. How to make investment decisions in uncertain markets. Faced with uncertain markets, many investors often feel anxious and are easily influenced by short-term market fluctuations. However, Buffett always remains calm, guiding his investment decisions with the following principles. Understanding your investments. Buffett emphasizes that investors must understand the companies they invest in and not blindly follow market trends. He consistently invests in industries and companies he is familiar with, thus better grasping the company's long-term growth potential. Ignoring short-term market fluctuations, Buffett believes that short-term market fluctuations are not worth excessive attention. Investors should focus on the intrinsic value of a company and its long-term growth potential, rather than short-term stock price fluctuations. Adhering to a long-term investment strategy, Buffett believes that investment success often depends on patience. He often sees himself as a partial owner of a business, not a short-term trader. Investors should only decisively enter the market when a company's intrinsic value is underestimated, and patiently wait for the company's value to gradually unfold during the long-term holding period. 6. Conclusion: the practice and summary of value investing. Through an in-depth analysis of Buffett's letters to shareholders, we can see that Buffett's success stems not only from his profound understanding of the market, but more importantly, from his adherence to the principles of value investing. In his view, the true investment opportunity is not to seek buy low, sell high opportunities during short-term market fluctuations, but rather to carefully analyze the intrinsic value of companies and select those with long-term competitive advantages for long-term investment. Buffett's value investing not only changed the fate of Berkshire Hathaway, but also provided invaluable wealth management experience for countless investors worldwide. In today's uncertain market environment, Buffett's investment philosophy remains highly relevant. If you want to succeed in investing, learning from Buffett's investment philosophy is undoubtedly a wise choice. Welcome to my channel. Hello, I'm Gregory. Welcome to my YouTube channel. Here, I'll share investment wisdom, business thinking, and financial management skills with you, especially drawing on the thoughts and experiences of top investment masters like Warren Buffett to help you understand deeper levels of wealth management and mindset. My channel focuses on financial literacy education. Whether you're a beginner investor or an experienced financial professional, I'll provide clear, easy to understand, and practical content. I believe investing is more than just a game of money. It's about understanding risk, decision-making, and finding your place in an uncertain market. About my direction, I've decided that here I will not only share in-depth analysis of Buffett's investment philosophy and business principles, but also cover related investment opportunities, trends, and how to uncover potential in this rapidly evolving industry. This is one of my future development goals. Through this channel, I hope to provide you with diverse perspectives, enabling you to better manage your wealth and make investment decisions, allowing you to see the potential opportunities behind the market, regardless of the industry. If you're interested in this content, remember to subscribe to my channel and click the notification bell so you won't miss any updates. Thank you for your support. I hope to grow and progress together with you on this channel.